Welcome to the webinar. I'm Rajesh Tyagi, President of the Practice Section. And I just want to take a minute to talk about the Practice Section. So our mission is to support the professional development of practitioners in the operations, research, and management science field. And to that end, hold on, let me see if I can see the slide. If you can change the slide, please.
Okay, yeah.
So as I said, this is the we want to support the professional development of practitioners, and to that end, we conduct a number of activities and hold a number of prizes. So we have the three major globally recognized annual competitions: Franz Edelman Award, Daniel H. Wagner Prize, and the UPS George D. Smith Prize. These are Informs level competitions, but which have been given to Informs Practice Section to conduct. We also have periodic events. So we have webinars like this one. And we also conduct a monthly networking happy hour. And we also have certain conference events, like we have practice focus sessions that we hold at the annual meeting. We have the again, we want to encourage people to come up with suggestions and volunteer in the practice section. So if you have any suggestions for speakers or would like to learn a little bit more about the practice section, please reach out to me. My email is simply my name, rajesh.tyagi@yahoo.com. And that's it for me. Back to you, Gautam.
Okay, thank you, Rajesh. So I now introduce the Sundaravalli. I think this is a joint initiative between Informs Practice Session and ORSI Ahmedabad chapter. Because few years back when Rajesh was the chairman of Edelman Award, we are looking for why there's not enough entries in from India. And then we thought starting this webinar series. So this is again it's a joint ORSI Informs initiative, and Sundaravalli is the president of OR Society and she is also a faculty in IIM Ahmedabad. I am a retired faculty, and Rajesh is a retired person from GE Global Research. So I would just hand it over to Sundaravalli to speak a few words about the ORSI Ahmedabad chapter and other. I think then I'll introduce Divya and start this. Yeah, Sundar, over to you, Sundaravalli.
A very warm good evening or a good morning, as the case may be, who is joining from all over the world. And ORSA, Operations Research Society of India, is an age-old formal organization committed to develop OR practices in the country, in India particularly. And here we try to conduct research which are practice-oriented, research which can be of significant importance to academic value also. And here, this particular Informs Practice session, this webinar series has been organized through Ahmedabad ORSI chapter. And Gautam and Rajesh has been forefront, and they have been encouraging, they have been promoting OR practice and OR research in the industry very, 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 very passionately. And it's a pleasure to be associated with them and to learn a lot from some of the webinars that we had earlier. Good quality talks have been done through our platform, and it's a pleasure to welcome you all and learn collectively from what is happening in the industry. Today we are going to hear from SBI. Thanks, Gautam. Over to you.
Yeah, thank you, Sundaravalli. Actually, we have a ORSI practice core team, which is from the people from the industry and people from the academia together. So we have Sanjay Kumar Prasad, Siddharth Sengupta, ex-TCS, Sankarsan Basu from IIM Bangalore, Bodaram Kumar for Swiggy, Mrinali Sharma from Lyric Shenbrin, and Sundaravalli and Sumita Nates. We have done practice prize competition in 2018 and 2019, 2018 at IIT Bombay and 2019 at IIM Ahmedabad. And recently, in 12th of January, we had the IIMA ORSI National Practice Competition. We have got about 15 entries, on which 5 were selected and the finalists. And the State Bank of India actually became the first prize winner. So we are now going to introduce you to the work of State Bank of India, and I have with me we have here Divya Nair and K. Srinivas. Divya Nair is a MSc in Statistics from MS University, Baroda, gold medalist, and she is a was a business analyst in TCS for some years, and total experience of 14 years. She has worked also as a teaching assistant and a statistician as a State Bank of India, working as a statistician. And K. Srinivas is a data scientist at the State Bank of India, and with a total experience of 10 years. So they have come out with this interesting work on end-to-end digital pre-approved personal loan for the non-salaried customers at the State Bank of India. So I am going to now hand it over to Divya and her team to speak about this analytics-based end-to-end digital pre-approved personal loan for the non-salaried. Over to Divya. I'm just going to move out of the stoppings here. So Divya, now you can log in and put it in the share mode.
A very warm good evening, Professor Gautam sir. Thank you so much for giving us the opportunity, Madam and Rajesh Tyagi sir. Thank you so much. Along with me is Srinivas, and our General Manager, Sri Ashutosh Kumar sir, is also there along with us.
So good evening and good morning, wherever you're located. This is Srinivas. I'm the data scientist, as sir has just described. I was part of this project, which is basically an end-to-end digital loan product for customers who do not have formal documentation of their income. The idea here was to simply use the cash flow of the customer based on his transaction profile to understand the risk that a customer poses in the terms of credit risk, as well as what is the limit that should be offered to him to ensure that his needs are met, but he is not indebted forever. He doesn't get into a debt trap. So I'll just get started with an introduction of State Bank of India. So we are India's largest bank. We are also the only Fortune 500 bank within India. Our customers have already crossed 50 crore. 22,500 branches, 63,580 ATMs, numerous CSPs, and our employee base itself is more than 2.3 lakhs. We typically maintain a market share of between 20 to 25% in all domains which are related to finance. We are not merely a banking company, but through our subsidiaries and joint ventures have also participated in things as wide ranging as insurance and private equity. Going further, if you look at the company financials, the balance sheet size is 61 trillion. The total revenue that was accrued was 4,66,000 crore. All of this in Indian rupees, of course. And one important point that we like to make, that which we always do in our quarterly analyst meet presentations, is that we consider the income that we derive from our analytics practice as a separate input to the bank's business, and that was around 1,37,000 crore back in FY24. This year, we are set to cross this benchmark as well. To the right, you shall see our team. We are reporting under the digital banking and transformation vertical under Sri Sandeep Ubale, who is the Chief General Manager and Deputy Chief Digital Officer. With him works Sri Ashutosh Kumar, who is the General Manager and in charge of the analytics, CRM, and digital marketing functions across India for State Bank of India. Shri Shakil Ahmed Agasmani, who is the Deputy General Manager and Department Head for the Analytics Department. Divya ma'am and myself, we have already been introduced, so I'll skip that.
Can you put your video on? Your video is off. No, video.
Sec.
Okay. Yeah.
Are we visible now?
They don't see that. Yeah.
Okay, just give me a sec.
Yeah. Just start video, put it on. Yes. Now we are right.
Great. So let me just get back to the presentation.
Hmm.
So yeah, as I was saying, this is our overall structure of where the analytics department is placed. And from a macro perspective, we are not merely intending to generate profit or generate business through this product. We were also a company which was created through an act of parliament to ensure that for sufficient capital for the growth of the nation was available, and to ensure that financial inclusion would be spread to each and every person within the nation. And we take that duty quite seriously even today, though we are a profit oriented company who trades publicly. We do take the vision of being the bank of choice for transforming India quite seriously. The idea here being not merely financial inclusion, but then digital financial inclusion, and ensuring that formal access to credit is available, or access to formal credit is available across all segments of citizens of the country. So just going ahead, this is just a list of the numerous subsidiaries and JVs that we have. We are spread over nearly 22 countries. And as I said, we have everything from private equity down till capital markets and certain technology companies as well in the form of CH, which was partnered with TCS. However, with State Bank of India, the parent bank, the motto is very simple: pure banking, nothing else. That's what we focus on in the actual bank. Going ahead, this is a simple snapshot of our analytics journey. If you look at the left side, you would see that we cover most functions. We are a 70-member team, and we sit right out of Navi Mumbai. Whatever work is done in house. We do not have any connections with any vendor or any consultant. Whatever innovation is done in house and based on the insights of our top management, who have risen through the ranks after going through operational assignments throughout their career. Now, in 2013, which was quite early for the Indian analytics scene, the State Bank of India established an analytics department primarily focused on descriptive reports to supply inputs to strategy. However, it was soon realized that the data that we were sitting on was quite more interesting than merely as a reporting function. We collaborated with IIM Bangalore and IIM Kolkata, with some of the professors arriving at State Bank of India to review our practices and set up the analytics department. We had a certain amount of training at IDRPT, which is a premier banking technology college situated in Hyderabad and backed by the Reserve Bank of India. And we also started inducting statisticians. This was the era when we went from being a paper tiger to an actual analytical force. We started using machine learning. We started with the database lending program, which is basically an end-to-end digital loan based on our existing customer database, where we run our scans in batch. Further, before we moved on to any kind of analytical product or workflow, we first ensured that we had a comprehensive responsible AI policy, and more importantly, an ethical charter in place. This ethical charter is not legally binding. It is a voluntary submission done by each and every data scientist within the bank to ensure that fairness, ethics, accountability, and transparency are maintained irrespective of what model we are working on or what domain we might be interested in. Going ahead, within 2019 to 2022, we saw a rapid growth, primarily due to the introduction of free and open source software, primarily Python. We were also able to create a separate data science cadre. We were one of the first banks in India to do this. And during this era, we were also awarded a patent for a fraud prevention system, which identifies branches where fraud is likely to take place in the future. We also operationalized a small data lake during this period. From 23 to 25, we have been growing further and further. We have been increasing in both for professional sophistication as well as technological sophistication, in the sense that we are now able to manage 145 production models. We have active research projects ongoing with IIT Bombay. We have an enterprise level data warehouse with a comprehensive data lake. And we have recently ventured into generative AI. In fact, I'm quite proud to say that in January of this year, we launched the first Gen AI chatbot for internal users within State Bank of India. That is something that we are definitely quite interested in to see how it progresses in the future. Now, going ahead, this is the enabling ecosystem for analytics. Analytics did not start off as a analytical function. It started out with a data warehouse meant for reporting purposes. Then it went to the data management office, which is basically a centralized function for data quality related issues. Once we had this strong base in mind, we ensured that there were no silos, at least when it comes to data, that we are able to access core banking, loan, etc., without having to go through much red tape. Going ahead, we very early on made a commitment to be 100% in house, to adopt open source technologies, to be ethical in whatever we do. And of course, we had to laterally recruit our team to ensure that the sufficient skills were present within the bank. As a result of all of this, we became pioneers in artificial intelligence and ML, at least in the Indian banking domain. And we were able to roll out end-to-end digital journeys, personalized marketing, several risk mitigation measures, some of which resulted in a patent, which you can see to the right, and operational efficiency. Now, the responsible AI framework, to give a brief gist, is just the way we validate our models to ensure that model risk is within the bank's risk appetite. It is a multi-level architecture. It starts out with a technical validation by a project lead. Then it goes around multiple departments as well as a check by a general banker, etc., before it is shown to top management, who bring in their own expertise as well as their own ethical concerns when it comes to artificial intelligence. And basis these inputs, we then release the model into production, meaning that yes, the time to market for some of our models is quite high, especially in high risk areas like credit risk modeling. But at the same time, we are able to do it ensuring compliance, ensuring ethics, and ensuring consent. So if we just go ahead, this is just a department brief again. 1,37,357 was the actual figure for FY24. Just a note here, this is the total advances business, that is loan sanctioned by the bank. If you look to the right, you will also see that we have divided it based on segment. Retail, SME is MSME. Agribusiness unit is ABU. Real estate and housing is IHBU. And the JV product commission is basically where we act as an agent for some of our joint ventures and earn a commission on sale of one cross sell. Going ahead, we will now delve into the actual product now that the context of the enterprise has been set. The idea here was quite simple. We wanted to create a simple financial product for non-corporate salary package customers. So what does this mean? Just a sec. We first started looking at who were the people who were part of this non-salaried base. From a macro picture, we identified that a major chunk of India's population is in fact in the informal sector and in the unorganized sector. And this is not a problem concentrated in one or the other industry. It is something which is spread across all industries, starting from agriculture down till things like finance, business, real estate, etc. And the reason for this is quite simple. The majority of India's businesses run from MSMEs, and they share the largest amount when it comes to employment. As a result, what happens is that banks are often unable to provide loans to such customers because they would not have income statements. And even if they had income statements, banks typically only accept income statements from AAA and above rated companies, not MSMEs or smaller firms. So thus far, what we realized was that the personal lending being done at the bank was concentrated amongst government employees as well as the employees of large corporate houses. We decided that this had to change, and given our experience dealing with end-to-end digital loan, we found that it would be feasible to do so in an end-to-end digital fashion rather than relying on our brand channels to reduce the costs, increase the margin, and pass on the savings to the customer. Now, this is sort of the background to it. The aspiration is that we should be the banker to every Indian, starting right from the farmer, right from the day wage worker, right up till the HNI or the ultra HNI. Now, the focus here was not merely informal sector workers, but new concepts such as gig economy workers, freelance professionals, people who are non-employed but do get regular credits or have independent income in the form of an allowance or through rentals, etc. The idea being that we would not look at an income statement, we would not look at a validated document, we would look at the cash flow over a long period of time and determine your requirement for credit as well as what is your repayment capability. Going ahead, the total customer base of SBI is around 50 crore. Now it's larger than that. The target segment for non-corporate salary package customers was somewhere around 20 crores. Out of these, the hurdles that we identified during the design phase were that the ticket size would be quite low, typically less than 2 lakhs, no traditional income proof. Most importantly, the bank has not offered similar products to them in the past, meaning that we had very little credit information about these customers. The income is highly variable and split across many transactions. So the typical way that we identify the income of a salaried customer is to understand the salary transaction, understand its narration and timing, and try to catch hold of that one transaction which is labeled as salary. However, in the case of the non-salaried customer, we realized that we would have to take an aggregate of the credits and do a bit of accounting to ensure that it is true income and not mere round tripping. And once we were able to do that, we arrived at a nice figure of what would be the income coming into the customer, what would be the typical outflow expected from the customer. Going ahead, we also understood that this was going to be a pan-India effort, and this was definitely not something which could be marketed through manual channels. It had to be digital first, and we were quite lucky because one of our sister departments, which was recently established, I say recently, but it's been 2 years already, is the digital marketing cell. And the digital marketing cell utilizes leads from the analytics department to reach out to customers using WhatsApp, using SMS, email, etc. And this end-to-end solution design, and when I say solution, I don't just mean the underwriting, the risk model, I mean the chassis around it. It includes the product that was built, it includes the journey on our digital banking platform YONO, it includes the terms and conditions that were set, how we would accept something as a signature from the customer. This required an end-to-end reimagination. The reason being that we were for the first time moving away from document-based credit to cash flow-based credit for our personal segment customers. While we were doing this with our MSME base, we were yet to start doing this in our um, personal segment customer base. Now, there have been efforts in the past, even within India, where similar efforts have been tried out on the basis of cash flow. However, the sad thing with such efforts was that they primarily relied on non-banking data, alternate sources of information, and relying too much on civil report or other CIC reports to give credit. And the credit was also balkanized. It was more of a convenience factor. Each loan ticket size was typically less than 20,000 or so. And what this led to was a situation where credit was becoming unmanageable for some of our customers. And these same customers were defaulting on loans, making them ineligible for interest subvented loans, which were being offered by the bank with the backing of the government. As a result, this product was imagined, and the ideas that were conveyed were ensured to be put in place right from the design stage. Any queries thus far, or shall I proceed? Great. So I think I'll just move on. From here, we get into the technical nitty-gritty. I would like to hand over to Divya ma'am to cover this portion.
Thank you, Srinivas. I hope I'm audible. Yes, sir.
Yes, yes.
Yes.
Oh, thank you, ma'am. So, getting into the technical side of the model. So, through PAPL digital lending, we are working on transforming customer experience, improving loan disbursements, and optimizing marketing efforts through data-driven approach. So, our data warehouse at SBI is a treasure trove of information. So, here we have data from more than 80 plus sources. So we are getting data from different sources like CBS, LLMS, etc. That is the loan originating or loan management system, etc. So we have extracted the data, and as discussed earlier, we are having a massive base of more than 50 crores of customers. So out of that, we have meticulously excluded financial inclusion customers, salaried customers, minors, NRI, illiterate customers, arriving at the final base of non-salaried customers. these non-salaried customers, we have done a extensive transaction analysis, and this was not a simple task. Handling more than 900 crores of transactions data was possible only with the help of massively parallel processing clusters at ETL and data warehousing. To better understand this segment, we conducted extensive exploratory data analysis, which was used to design the rule engine for eligibility criteria in consultation with the business SMEs. This also helped in applying the proprietary risk filters and fraud modus operandi pattern detection. We have also conducted quarterly NPA analysis to modify the rule engines that were already existing in place. So moving over to the fact analysis, we employed fact analysis for various parameters like age, NPA, vintage, etc. to analyze the correlations between these variables and to help to identify the relationship between these variables and potential correlations. Based on the industry and business understanding, more than 2,300 variables were created, including the debit credit ratios, COV, that is the coefficient of variation, etc. To ensure data quality, we performed missing value treatments, outlier detections, and these steps enabled us to create a more robust and reliable dataset. So our variable selection process employed advanced machine learning techniques like the variable inflation factor VIF, Boruta, etc. Using these techniques, we have selected the top 15 most significant parameters for our risk model. So this enabled us to accurately segment our customers based on their risk profiles. We will discuss this risk model in the further slides. So in addition to this, we also developed a propensity model which segmented our final leads into hot, warm and cold leads. So which helped us to prioritize the leads and optimize marketing efforts. Leads generated from propensity model are then passed through the eligibility criteria like CIBIL check and other delinquency checks, and then they are passed on to our YONO, that is this, we can say financial superstore, which helps to offer the digital loans to the customer in just 4 clicks. Our design decisions were influenced by several business problems. One of the major challenges was identification of credits or income. Since the target customers are from informal segment, they lack traditional income proof. To address this challenge, we employed metadata analysis to identify income patterns for our customers. We excluded self transfers and cash transactions to arrive at the net monthly credit.
So, if I may just chip in here, this is a very important point because often the question that is raised is given that the account aggregator ecosystem has already gone live, do banks really have a strategic moat when it comes to data? While yes, the data of our customers does belong to them and we adhere to the account aggregator ecosystem guidelines, we must note that there is a large amount of metadata which is created whenever a customer interacts with our mobile app or tries to avail a loan at our branch or any other activity. This metadata is primarily owned by the bank and it adds critical context without which it would be difficult to rely on transactions alone. This includes things like what was the channel through which a credit arrived, who was the counterparty from whom the credit has arrived, and finally, is there round tripping going on, which is basically transferring your own money to a separate account and then sending it back in to create what appear to be inflated credit to your account. Back to you, ma'am.
Yeah, due to the informal sector, these segment of customers would also have a lower income tendency. Therefore, some inconsistency in the income was also allowed. Like if you are considering the transaction for last 1 year, maybe 9 out of 12 may be a good proxy for the income to be calculated. Also, the next challenge that we faced was lack of training data. So, because no such existing product was there earlier in the bank, so to train the model, there was no such training data available, because of which we had to use unsupervised training models. Regular NP analysis had to be performed to navigate through the evolving fraud landscape, updating the rules and fraud prevention rule engine on a regular basis.
So here I would just like to add that the bank maintains its own internal fraud register to which any fraud committed across the length and breadth of the nation with State Bank of India involved as a party is reported. A root cause analysis is done and a modus operandi is identified. As a result, we have a comprehensive database of even emerging scams or emerging techniques to defraud the bank. These are then adapted into rules which are decided by our business experts, business SMEs. These are then implemented in the same massively parallel processing framework that we have discussed earlier. As a result, we not only have a credit filter, but we are also able to detect the types of frauds that are common in the market today and deny such applicants a loan. Going ahead, we also
Would
ensured
you
that.
mind? Would you
I'm
mind
sorry.
me intervening for a second? You're telling, you're communicating about a lot of frauds and other things which you are able to proactively detect. But whatever you're trying to
Sundaravali,
say,
can you have the sessions after the questions after the session?
no,
Maybe.
I'm not a session. I just want them to give an example of which so that it becomes relatability easier. Please go ahead. This is not a question. Yeah, please go ahead.
Okay,
Sorry,
Acha, you
sorry.
are giving some input for the okay.
Yeah, if you're able to give some examples, then we'll be able to relate it better. You're saying no new frauds are also you are able to detect. If you're whatever you're saying, give some examples so that it's better for us. Yeah, thanks. Sorry, I'm not asking any
Uh,
questions. Thanks.
Right, no problem,
Mhm.
ma'am. So while we cannot give an example which is currently in play, we can give an example of a historical incident. What happened was that in this model, there are certain parameters which are reliant on credits and debits within the transaction account. And what was determined by a certain group, I will not name it, they identified that by manipulating some of these credits, by manipulating some of these narrations, they were able to inflate their income to a higher level than was otherwise possible. Similarly, we had seen instances where the KYC details of certain customers were being changed in an effort to prevent them from being tagged in Hunter, which is a nationwide database of fraud registers across all banks, or being flagged in civil or other CIC data. Now, what we did as a result was we started going through the audit log of our core banking, looking not only at financial transactions, but then looking at changes to the profile of the customer and detecting when such a change would have a material impact on the credit risk of the customer. Which is to say, if there is an element which would impact our ability to look you up in the fraud registry or within the Hunter tool, we would then request that a formal verification be done by the branch manager before we move ahead. So this is just a small example of one such scenario. Again, the issue here was not so much that this was discovered. The issue was that this was being done in an organized fashion and that several loans were sanctioned in a concentrated way. Of course, as ma'am has mentioned, we do conduct very regular NP analyses, which includes, of course, concentration analysis, as a result of which we were able to detect a network of such fraudsters, and then we change our proprietary rule engine to ensure that such customers are not sent forward in the journey. I hope that suffices.
Okay.
Going ahead,
So,
now, ma'am, please go.
Yeah, thank you, Srinivas, for adding the points.
yeah,
So,
Divya, go ahead.
yeah, most of the challenges we have discussed here. One more challenge, major challenge that we faced was the vast amount of data that we had. So, to handle this vast amount of data required us to employ advanced analytics techniques. So, the reason behind using this two-step clustering was the, like we mentioned in the on the right-hand side of the slide. So, one was the scalability. So, efficient for large data sets as it reduces computational load by pre-clustering before applying hierarchical clustering. Also, it handles mixed data and automatic determination of clusters. That is, we do not need to mention the cluster numbers, that is whether it should be 5 or 3, whatever. So it automatically detects the number of clusters. Minimal parameter tuning is required. Also, interpretive results are given. Like nowadays, we are talking about responsible, explainable AI. So here we have a model which explains why are the results given. So there is a reason behind selection of the customer or identifying the customer as a low risk or high risk. So
here I would just like to add that another advantage that we gained from this was that the metrics that were being used to define clusters were in fact business metrics which were easily interpretable by the credit risk experts that sit at our corporate center. This was a collaborative exercise. Definitely, there was a lot of analytics involved, but at the same time, that analytics would not have been fruitful without the managerial inputs that we were able to get or the risk inputs that we were able to get. And this was only feasible because we were working on the same platform, on the same data set, and on the same rule base or set of variables which were understood by general bankers in their day-to-day operations. Please go
moving on to the next slide, we will go through the cluster results. So this was our pre-clustering, or we can say our first two-step clustering that we had done. So cluster 1 demonstrates more consistent results compared to cluster 2, which accounted for 30% of total customers. The cluster 2 was excluded for further from further analysis. So cluster 1, since it had 70% of the customers, we have then reclustered, or we can say we have applied a two-step clustering onto this cluster 1, and cluster 2 we have excluded because of its inconsistency in the variables. So we have done a cluster profiling, and also based on the business inputs, we have discussed this clusters with the business also. So based on their inputs, we have selected cluster 1 and cluster 2 was discarded. Cluster 1 was then further segregated, or we can say a two-step clustering was done on cluster 1, and we arrived at 5 clusters. So out of this, again doing the cluster profile analysis, because we didn't had a training data set, we had to go with the cluster profiling, because of which cluster 2 and cluster 5 were selected. Initially, we also thought of including cluster 4, but based on validation and many times discussions with the business SMEs, we concluded to include only cluster 2 and cluster 5 for the final lead generation process.
Now, I would like to apologize, but the information regarding variables is proprietary and that cannot be shared. What I can advise is that the ratio that you see here, where the pointer is right about, one second, right about here, this was a COV, and there was much higher variation seen in the credit flow in cluster 2 when compared to cluster 1. There are other factors as well, the typical income that was being seen, the debit to credit ratios, what were the loans, if any, that were existing with the customer, along with some other factors, which of course we cannot delve too much into. Again, because this is a live production model and we are still sanctioning loans based on this model. So until the model is retired, we would not be able to share the variables. Going
Okay.
ahead.
Yeah, moving
You
on
can
to the
continue. Divya,
timeline.
continue. Yeah, you
Yeah,
can continue.
moving on
Yeah.
to the timeline. Thank you, sir.
Hmm.
So we started in January 21 by received a request from the business. So the business requirement was like we wanted to offer this untouched category, that is the non-salaried segment customers, where we were not offering any personal loans to such customers even at the branch level. So we wanted to offer a pre-approved loan to such customers, and that too digitally. So we had brainstorming sessions within the department as well as along with our business units. And further, we started with exploratory data analysis. Iterative processes were done, how we can do this. We almost had this to and fro discussions with the business and so on for almost 1 year. And then the approach was finalized, and our final analysis and model building we finished in October 21. Like we completed the analysis in October 21, and the back testing and technical validation was done. So based on whatever non-performing assets or were there, so we did a back testing based on that. So in October 22, final product approval was done. So the differentiator we needed was like no complex journey should be there for the customers, and also it is not necessary that the customer would be a tech savvy customer. So it should be easily approachable to the customer, and it should be only in 2-3 clicks. So that was the need of the time. So in February 2023, journey on Yono was done, and It was developed and tested, and finally in March 23, the product was launched.
I would just like to add here that if you see, there is a very long timeline for the development of this project, and you would see that nearly half a year was dedicated solely to testing. The reason for this is quite simple. When State Bank of India releases a product, it is anticipated that there would be India-wide rush for such a product, given the reach that we have, not just in metros and urban cities, but then in rural areas as well, which have a significant credit need. So we wanted to make sure that whatever we stepped out with was not merely good enough, but was one of the best and at least met the highest quality standards which we would apply to any other loan. Going ahead, we also needed to ensure that the product was accessible to those who have been contacted by the bank, which is why we went for a pre-approved model, which again goes back to the point of trust in SBI, that when the bank gives you a call or sends out an email, it is only doing that for your benefit, and it would only send that out to meet your needs. Now, this is a significant differentiator for the bank, and in fact, since the launch of our digital marketing or MarTech platform, we have seen that we are having much better conversion rates than peer banks when it comes to low touch access points such as email or SMS, etc. The reason being simple, that when they saw an SMS or an email from State Bank of India, they typically prefer to open it, because it is very rare that the State Bank of India launches out with a irrelevant offer, or an offer which might not be appropriate for you. Going ahead, this is the PAPL operations, what we do on a month-to-month basis, ma'am.
Yeah, I would like to add here, in the first month of the launch itself, we had sanctioned 1.5 lakh of loans to these customers. So it was very visible that this product was very much needed at that time. So this is a monthly process, like the model is run on a monthly basis. So based on the customers, the journey of a pre-approved product involves a rigorous process flow. So we started by selecting the base of eligible customers based on the rule engine, followed by the NPA RC root cause analysis that we do on a quarterly basis. Also the fraud modus operandi pattern detection. We review and update the rules, and the final set of eligible customers are passed through the risk model. The output of the risk model, that is the low risk customers, are then passed on through the eligibility criteria for final calculation of loan limits, etc. The final leads are then handed to our channels for end to end digital journey. So this is the digital journey that we are showing here. The monthly marketing analytics here will be discussing. So the final eligible set of customers are shared with different channels like YONO, INB, that is internet banking, and so on. So YONO is our mobile app, that is you only need one. That is the full form of YONO. So customers are intimated via YONO and the internet banking platform, and also congratulatory SMSs are sent to these eligible set of customers. Customer accepts the loan in 4 clicks on YONO platform. The propensity model categorizes the leads into hot, warm, and cold leads, which prioritizes the leads and are pushed to the branches and contact center for marketing purposes. The customer applies through YONO, and the loan is sanctioned only within 4 clicks.
Now, one point that we would like to make here, which was a design decision, was that this was to be a digital only journey, not merely a digital first journey. And the reason for that was quite simple. Given the low ticket size and the risk involved, the margins had to be maintained, and that was simply infeasible if we included manpower costs as well. So we had to make it a digital end-to-end digital process, and all of these processes that you're seeing here today, the monthly risk modeling and the monthly marketing analytics, these were things that we had to set up in-house as a practice to ensure that we are able to meet the demand of this particular project, which, as ma'am has already mentioned, burst out with a scale
To give
rarely
some
seen
time
elsewhere.
to the question itself, so you have to finish in another 1-2 minutes. Yeah.
Okay, sure.
Okay.
These are some of the augmentations that we had to carry out. So number one, the leads were all checked out in advance and provided to branches. Wherever certain information was not mapped to the customer, such details were provided to the branch to update required KYC details. There was an increased pressure on branches, and branches were not too happy with low ticket size loans, which is why we went for an end-to-end digital loan. Further, it becomes very difficult to monitor such a large customer base, such a large portfolio of accounts. As a result, we automated that through our early warning signal, which is again in-house developed, again AI based. And we connected this to our automated robocalling system. We connected it to our SMS hub and other such platforms, as well as our branch managers and our outbound contact center. As a result, the entire end-to-end process from the minute you opt for the loan to the to collections or recovery is completely done in a centralized fashion. We do not want the branches to intervene in such cases. Oversight remains at a central point. Going ahead, the benefits were the capture of customer wallet share (PPC), improvement in the digital banking platform, reduced NPA, and better manpower usage. So this is till December 2024. We had 5.48 lakh loans sanctioned, worth nearly $1 billion. That has since risen. Now, the important point I would like to show here is that the nearly 60% of our entire disbursal was in rural and semi-urban areas. And not only were these rural and semi-urban areas present within the typically industrialized belt of Maharashtra, Karnataka, Telangana, AP, and Tamil Nadu, but these were spread over certain North Indian areas where credit penetration has traditionally been low, which includes Rajasthan, Uttar Pradesh, Bihar. As a result, we were able to showcase that this sort of an innovation is not merely meant for the HNIs or merely meant for the metro areas, which is where most other firms are focusing, but that it could be a lifeline for somebody who's living in a relatively isolated area as well. So that's all from our side. Please go ahead for inquiries.
We will have now question and answer session, but before that, you can look into the chat box, and there are some questions which is there. One is from, I think there are 5 or 6, 1, 2, 3, 7 or 8, I think, mostly from Ram Mawar Singh, but first is Sanjay Saini. Will you be sharing the slides after the session? I don't know if this is the proprietary possibly.
It's the webinar is being recorded, so it should be available on the website in a few days.
We have removed proprietary information for this presentation.
Okay, fine. Then the question from Ram Mawar Singh. What type of history do you look for providing a personal loan, credit loan, all types of loans?
So we do not typically require that the customer have a loan with the bank. Many of these customers are in fact new to credit within the bank. We look at their transaction profile, not their repayment history, though of course that is a consideration once the data is available. So if there is a customer for whom there is a loan available within the bank, we definitely do check his repayment pattern, and that is spread across all types of loans, including the Pradhan Mantri Jan Dhan Yojana overdraft of 5,000 rupees, which was later extended to 10,000, which most of these customers had availed in the past.
Okay, next question is how to take care of the customers. How was moved salary to non-salary, and has the moved across geography for the work in the past to provide loans? Yeah.
So the idea here was not to focus on the salaried customers. Salaried customers are identified based on the data shared to us by the corporate, as well as the account opening process, which includes a special code which maps it to the organization. This is removed once the customer or the company advises us about the same. So that is a managed data flow. Across geography, it's quite simple. We do not rely on any sort of physical network. We require that the customer comes to YONO. Even if he is going to a branch, he has to open YONO to avail this loan. So geography was not a problem for us. As far as language and other such concerns are present, the marketing team took care of that. We have a diversified market function, both at the state level as well as at the centralized level, which includes resources in local languages, etc.
In such scenarios, do you still look into the history of the providing loans?
So no, having a loan history with State Bank of India is not a requirement for this loan. Of course, a loan outside, if it is available, even that's fine. Or if you have a loan within SBI, that's when we check your repayment thoroughly. Going ahead, metadata, if it is fully cash transaction, how is that considered? Typically, we do not consider cash transactions. It is separated out as a variable, and we showcase it as a separate point in the model. What we have found out through several years of underwriting using analytics is that digital footprint is quite important, given that cash is not easily traceable once it moves out and comes back in. It can be manipulated. So that is why we prefer to go with digital footprint customers. And with UPI, a digital footprint is present for almost every customer.
What about this question on international transaction? Next question.
This is not available for international customers at all.
This is not available for international customers. Okay. And then there is a question on KPIs.
To consider to scale the customer scope for providing the personal loan.
Personal loans, yeah.
So the KPIs that are monitored are quite standard. What is the total advances and outstanding, which is monitored on a day-to-day level, right from a branch right up till the bank level. The reports are advised to various controllers. In cases where the controller has to control a large number of branches, KPIs are auto-monitored by AI. And whenever there is a significant deviation that is triggered, this becomes especially important in this particular product, given that the number of customers was quite large. So we could not expect that a controller or a branch manager go through each record personally. So AI decides which is to be reviewed, and from there we go forward. So the next question I think has just arrived.
Yeah, I think there was a question from Sarvana Kumar. I think that question is gone. Let's take it out. Okay. And
so
then Sundaravalli.
I have some questions. I have some questions if you don't mind. Yeah. Can I?
Yeah, I think let's just finish this. I think our training model with the data you have collected now. Yeah.
So we have restarted the process now since it's nearly been 1.5 years since the product was rolled out. Now we are no longer thinking of relying on unsupervised learning as our primary base because, of course, we have repayment data for most of these customers.
Yeah, Sundaravalli.
Yeah, very, very, very interesting presentation. Very interesting presentation, and I am honestly, I've been SBI is my favorite bank, and I've been a very loyal customer for ages. So there could be a little bit of a bias, but nevertheless, I want to put my comments in a little bit of a in a manner a little bit of critical and understanding it better. And see, this YONO app, everybody using that. I know about this. See, the fundamental problem in NPAs, when you look at things, whether it is an individual customer or a current commercial customer, business customer. See, how do you prevent any customer to avail loans or anything from multiple banks? So when you're talking about metadata, you talk about metadata only those which are pertaining to your bank documents, etc. So I may submit the same salary certificate, same financial things in other banks, and I may avail loans, and I may not be able to pay. So fundamentally, the overall objective of AI or machine learning in the banking system should be to prevent fraudulence, so that the system is trusted by your customers and everyone else, and so that transactions are foolproof. But how do you prevent a customer? How do you prevent a customer? Don't you think? I know that there's a lot of competitiveness between you and any other public sector bank or a private bank. But is it not a good idea for you to, in some sense, collaborate? In some sense, collaborate about what you're calling as a risky customer or somebody like that.
So, ma'am, for this, the State Bank of India and several other banks had come together to finance TransUnion CIBIL. Even in this loan, where credit history is not expected, it is mandatory to do a CIBIL check to see if he has past loans or current loans in any other bank, and not just a bank, but any NBFC or FI. As a result, even though the modeling is done on the basis of only transaction history, before the loan is disbursed or even sanctioned, we do check with CIBIL to ensure that he is not over indebted. EMI and MI ratio is also tracked.
Yeah,
So,
also the delinquencies are
Okay.
seen, ma'am. So if he
Sure.
has been delinquent in any other bank, we are excluding such customers from the leads.
My only case in point at this point of time is ABG Shipyard. If you look at ABG Shipyard as a client, every other bank, name the bank for anybody worth his salt. Everybody has, jumped into giving loans to ABG Shipyard, including SBA. So these are some of the things I do not know how your
These are
system is working.
specific cases, Sundaravalli. This is not a
Yeah, yeah,
specific case,
yeah,
right?
yeah.
Okay, there are
The
still
second
some
thing is that how
questions which is left.
how
Huh?
do
So
your
do you
employees
so do you
take
not
it?
address them? There are some.
Sorry,
I think there's Sravana Kumar. In general,
Shravan.
AI integrated, yeah. Existing model, if so, are you using open source LLM or proprietary models? If not, any roadmap to update this? This is one. And another is from Ram Awar Singh. Okay, you can answer the first one. That's Savana
yeah.
Kumar. Mhm.
So, generative AI is not integrated into this model. The generative AI models that we do have are based on open source LLM. We are not dependent on any proprietary model. While we do use cloud infrastructure, we have ensured that we are cloud neutral. We have also started procurement of GPUs within the bank to ensure that we are not reliant on a hyperscaler. But State Bank of India, being the size that is able to create a hyperscaler of its own, not perhaps at the size of AWS or Google, but good enough for our needs. Going ahead, any roadmap to include this? Gen AI, sir, we are primarily looking at it as a knowledge-based management tool and as a marketing tool. It is not currently intended to be integrated into our underwriting cycles. It is not yet proven for that. Going ahead, there are many apps which provide personal loan days by the individual apps. Are they following the same operations or are they different? No, these other apps are quite different. They focus on what is known as alternative data. This is something which has been raised as a concern across India, including by the RBI governor. The reason being that such information is not really tied to the finances of the customer. And I recall one of our top management, as in a discussion with RBI, of course, had said that they were aware of certain such lending platforms which were using your phone call records and seeing whether you are calling your mom every day. And somehow they correlated that with good repayment capacity. We are definitely not doing that. That is a relatively dangerous way of assessing the credit risk. We rely on pure financial transactions as far as possible, digital or alternate channel. Going ahead,
Yeah, there
Mr.
is
Ram,
Ram Awar Singh. Yeah. So, yeah, Ram Awar Singh.
since based on recommendation from the engine, what has been the learning to the team, and how is the feedback sent to the engine for new recommendation? What are the learnings? So, sir, as I said, most of our learnings were more on the side of fraud and spread of NPA. These are the areas we concentrated the most on within the first year because this is known as the quick mortality period and typically means that there is a flaw in pre-sanction pre-sanction monitoring. So what we realized was that there was certain exploitation being done of the credit flow, and we were able to stop that by changing our risk models to only consider certain types of transactions, filtering it down even further. The second thing that we learned was this practice of removing KYC information so as to prevent the customer from being tagged in CIBIL or within our own negative list of customers. So for that, again, we had to go into the transaction log of our core banking, which, by the way, is unbelievably vast. We are rated at 17,000 transactions per second. And now that UPI has come out, we are well beyond that. We have to go through each one of these transactions to detect any case which will impact the credit scoring processes variables. So we track whether a variable has been manipulated, and we do it over a course of 6 months. So this would ensure that whatever is being fed is correct. This is how we incorporate our learnings. We have not yet adopted adaptive ML What we are planning to do is, now that we have repayment data, we would build a classification model, more traditional, binary classification model, and from there we would start looking at things like adaptive or online learning. Going ahead, do you consider external economic events like future high inflation, deflation, or global recession? All of this is again factored into our overall corporate policy and risk appetite. We have appetites defined based on sector as well. And as far as high inflation and deflation or interest rate regime is concerned, all of this is factored into what we call our RAROC, risk adjusted return on capital, wherein we ensure that the interest rate that is applicable to a product or a portfolio is such that it meets the NPA outflow, that it meets the capital required to reserve, that is required to be reserved by Basel and RBI, and that it then generates sufficient margin to be more beneficial to me than investing it in the stock or debt market. All of this is taken care of by our risk team, which again sits out of Bombay. And these values arrive to us ready-made. We only have to look at the product to make a decision. We don't look at the macro, which is handled by departments like our economic research department, which is headed by a well-renowned economist. I hope that answers your question.
Okay. Any other question, Sundaravalli, or anything more?
Very, very interesting presentation. Very interesting presentation. Recently, I did a case on AI for AI and machine learning in insurance deduction. So that is something that I did, and lot of similarities. Fraud detection is one of my key interest areas. It's an interesting presentation.
Thank you.
Thank you.
All the best to both of you. Very well done. Very well done.
Thank you very much.
Put the slide back, and I think one announcement, which is that if you like to give any suggest any speaker, then you can contact either me or Rajesh in my IMA address, or Rajesh in his address, in his email provided here. And we look forward to your attendance again in the future presentation. This was a great work which was done by SBI in terms of applications of analytics and machine learning in pre-approved loans. So thank you, Divya, and your team. I think it is definitely a great session. Thank you all of the attendees who has come there. And thank you, Sundaravalli, Rajesh, and the team.
Thank you very much.
Thank you.
Have a good day.
Thank you, everybody.